If you've been paying attention to real estate headlines lately, you've probably heard a lot of conflicting takes. Prices are up. No, wait, prices are down and the buyers are back. And actually the buyers are being cautious. So if you're trying to make it like a real decision based on all of the headlines, it can feel very overwhelming. And it's national headlines, right? It's not local headlines. So here's what we're going to do today. I'm going to slow everything down and I'm going to talk to you about what's going on locally. I'm Devon. I'm an associate broker with Dave Jones Realty, have an office here in Middletown, and a local real estate expert in Middlesex County. Every month, I sit down and go through all of the stats on the MLS, and I'm going to break down what's actually happening in our market using real data, not just talking headlines and opinions, so that buyers and sellers in Middlesex County, in Middletown, Cromwell, Durham, all of the local communities can make confident and smart and educated decisions. Today, we're going to compare January of 25 to 26. I'm going to show you what happened, what changed, what didn't, and what it means if you are thinking about buying or selling this year. There's not going to be any hype, no scare tactics. It's just going to be the numbers, the trends, and the truth behind them. So we're going to get right into it. But before we get into the numbers and the charts, we do need to talk about something that I don't think people properly explain. And it's kind of one of the reasons that the market and the numbers and everything is so misunderstood with the market reports. So if you're getting a home valuation and people are sending you PDFs of all of these numbers, this is what you need to pay attention to. Throughout the video, you're going to hear me reference median price and average price, right? We took statistics or math at some point, and we know, ideally what median and average prices are. But the two numbers are very, very different, and they do different things. The median price is the middle of the price, right? Half the homes sold for more and half the homes sold for less. The average price is the total number of all sales divided by the number of homes that are sold. So why does this matter? Averages can be skewed. If there are a few higher priced homes that sell in a given month, the average is going to jump off. So you're talking about outliers. Even if the most buyers didn't actually pay more. The median, on the other hand, is telling us what a typical buyer experienced. So when the median and the average move in different directions, this is not an error. This is just information. This is why we give you both of those. So just keep in mind, because you'll see it clearly as we move through the comparison, but there is a difference between the average and the median. So when you're getting your PDFs and your home valuations and all of that, just keep that in mind. So we're going to talk about the big picture and overall pricing. In January of 2026, the median sale price of Middlesex County was $301,000. That's actually down 1.8% compared to last year, January of 25. So on its own, that number may sound a little bit negative, but you got to remember, context is going to matter. This comes after several years of rapid appreciation. You're talking 20, 25% from COVID years to now. So a modest pullback at the median level is actually just a sign of normalization. It's not a weakness, it's not a downturn, but this is where it gets interesting. At the same time, the average sale price rose to $334,000 and change, 524. It's actually an increase of 4.1% year over year. What does that tell us? Well, it's telling us that the higher end homes and the better quality homes are going to continue to sell strongly. And while the middle of the market, even while the middle of the market softened slightly. So in other words, the market didn't decline. Please don't think the market is declining. It sorted itself out and buyers are becoming more selective. One of the other things that I am hearing is that there's an impending crash and people are waiting for the crash and waiting for the prices to come down. And I do always ask, where have you heard this information? Because the numbers that I'm looking at and the statistics that I'm following and the market data that I'm getting on a regular basis from the industry experts all over the country is that there's no crash looming. There's a slowdown in certain areas. Connecticut is not one of them. Hartford and Hartford County is I believe was named at either Zillow or Realtor.com as the #1 fastest growing market in the country. Hartford. So we're not in that area down here, and we're going to talk a little bit about the days on market and the pricing and all of that in just a second. But there's not this like impending or impeding crash that's coming. Also, you got to look at some of the statistics about what is considered a crash, right? We think of the '08 crash, And the number of homes like in foreclosure that people couldn't be paying for their mortgage, banks were taking over everything. And that was at like 20%. Like it was a really, really high number. I believe the numbers now are 0.5% of homes are in either pre-foreclosure or foreclosure. So it's a very, very small number. There's not this, looming crash coming. And people who are waiting for the crash to come are going to be waiting for a really long time. So activity and volume, we're talking about momentum. Because price without activity does not actually really mean much. And in January of 2026, 34 homes sold. So that's up 13.3% from January of 25. Dollar amount, it was $11.37 million, and that's up almost 18% year over year. If the market were truly struggling, we would expect to see the following things, right? Fewer buyers, fewer transactions, and lower volume. But that's not what happened, and that's not what we actually saw. So for this year, more homes were sold and more money was moved. This is telling us something very important. Buyers didn't disappear. They've been waiting for the rates to come down, and they've just become more intentional. With the rates down a point from where we were last year, more buyers jumped back into the market to buy. So days on market is also something that is one of the more misunderstood stats in real estate. And days on market, or DOM, if you see like on a valuation DOM, in January 2026, the median days on market was just 14. So houses were actually selling 6 days faster than January of 2025. On the surface, that sounds amazing, right? Great, you sold your house a lot quicker. But what matters is why it's happening. Because this data points to a two-speed market. Speed one, homes that are priced correctly, homes that are priced based on condition, based on location, based on layout, and recent comparable sales. These homes moved quickly. This is what your listing agent is supposed to be doing for you. If it's well priced, it's going to capture attention within the first 2 weeks. And that's when a buyer's interest is at its highest. Now, here's speed two. Homes that are priced based on what the neighbor got last year, what the seller needs to net, or extremely outdated expectations, these homes actually slow down. And this is where sellers will often get hurt. One of the most common things that sellers say is, well, we can always come down later, right? We're going to price it high and come down on the price later. But here's the reality. The first 10 to 14 days of a home is actually, that it's on the market is extremely critical. This is when it gets the most showings, the most online views, and the most serious buyers. Buyers don't wait to see if a price is too high. If they want the house, they're going to buy it. If not, they do move on. When a home sits longer than expected, your buyer psychology is going to shift. So instead of asking, how fast do I need to act? They start asking, what's wrong with it? And can I get a deal? How much leverage do I have? Because as listing agents, we've been telling sellers that a well-priced home should sell very quickly. So if it hasn't sold very quickly, buyers are going to say, maybe I can lowball it. So longer days on market do reduce the urgency. They encourage lower offers, and they lead to tougher negotiations. Statistically, homes that require price reductions often actually sell for much less than they would have if it was priced correctly from day one. So ironically, pricing too high can actually cost the seller more money at the end. So let's break down the prices for Middlesex County by the price range, because buyer behavior is not the same everywhere. Our first level is going to be our entry level at about $200,000. So in the under $200,000 range, there were few total transactions, mostly because the inventory is extremely limited. And when a home did come on the market, competition was very strong, and investors are all over this. Investors are going to get in there and get all the things under the $200,000 mark. Days on market stayed tight. Buyers moved quickly. Now, condos versus homes, that's like another whole discussion before that $200,000 mark. But overall, it remains one of the most supply-constrained segments on the market. The next segment is going to be your $200,000 to your $400,000 range. So this is the engine of Middlesex County market. 87 homes sold in this range, which is a 13% increase over last year, and the median days on market was just 12. Buyer competition stayed very, very consistent, And this is where correct pricing really creates momentum. Homes priced well here do not sit. They get sold. The $400,000 to $600,000 range, though this segment saw really strong activity, but buyers did become more selective. Condition mattered more, presentation mattered more, and pricing mattered more. So homes that missed the mark took longer to sell. And miss the mark could be, again, pricing, condition, and location also comes into that, but we can't change location. We can only change pricing and condition. Now your $600,000 and above, this is your higher end. There were few buyers. There was longer decision cycles, longer days on market at certain price points. Luxury buyers are still very active, but they are very deliberate. And this is where pricing becomes even more important and can be very, very costly. All right, so let's talk about inventory and supply. In January of 2026, 34 active listings. That works out to only about 1 month of supply. So if every single house sold in the next month and nothing came on the market, we're out of houses. So a balanced market is typically 5 to 6 months. So we're definitely still in a seller-leaning market, but here's the twist. Compared to January of 2025, new listings dropped 55% and new pendings dropped 50%. This is telling us that sellers are hesitating. Why? Well, why? Think of COVID rates, right? Because many sellers have really, really low interest rates and they aren't sure where they're going to move next, right? If they become a buyer and it's still really competitive, where are they going to go? And they don't want to give up their rate. Or maybe they're waiting for clearer signals, and this creates artificial scarcity. In a low inventory market, pricing mistakes stand out even more. So buyer behavior. Let's compare buyer mindset. In January 2025, buyers were, well, fear-driven, rate-sensitive, afraid of missing out, and willing to compromise. Very, very similar to COVID times. In January 2026, buyers are definitely payment conscious, they're data-driven, they're selective, and they're slightly less emotional about it. Homes are still selling for about 0.5% over your asking, but again, only when priced correctly. The market rewarded for preparation and not optimism. So what does all of this mean? So for the sellers, pricing is no longer a guess. It has to be a very strategic plan with your listing agent, your marketing plan, your pricing strategy, what day of the week you're going to be listing on, what is your goal. Longer days on market, remember, are going to weaken your leverage and the final price. So you have to price it accordingly. For the buyers, you have a little bit more time and a little bit more leverage depending on the bracket that you're looking at. But you still need to be decisive on well-priced homes. We are still seeing multi-bid situations. And for you investors, supply constraints remain. The demand is stable. Disciplined strategy is going to win. So when you hear someone saying that the market is slowing or cooling or correcting, here's the truth. The market did not fall apart. It is not anticipated to fall apart. Don't listen to the headlines. Listen to your local experts. The market grew up. It's now a more mature and more normalized and stabilized market. And the winners aren't the fastest. They're the most informed. So if this breakdown helped you, please hit like, subscribe, drop a comment with that stat that maybe surprised you the most. And if you want to know how these numbers may apply to your specific home or your price point, that's where local data becomes real leverage. So thanks for watching, and I'll see you at the next one.